Hello everyone. I hope everyone is doing well. Dear students, we have completed problem number 9th from Unit 3 Techniques of Financial Statement Analysis from Cost Accounting. Right? Cost control and management accounting. I'm taking this problem from Pankaj publication. Page number E26. Now, see, the following are the extracts from the balance sheet for the years 2016 and 2017 and the supporting notes to the accounts. Prepare the comparative balance sheet and comment on the financial position. So, these are the particulars what he given, and 2016 is the base year, 2017 is the current year, as you already know. Okay, what is the pro forma for this comparative balance sheet, dear friends? Here in this problem, comparative balance sheet pro forma is particulars 2016 base year, 2017 current year, and absolute change value. Okay, so and after that percentage. Here in uh, percentage we will take here again equity and liabilities. We will take, as you know, equity and liabilities, shareholders fund and share capital. Okay, and after that non-current liabilities we will take, right? And current liabilities we will take. Okay, actually, we will solve this kind of problem in a vertical column, and total ABC means A is the equity liability shareholders fund, and after that current liabilities all together total. In our previous sum we have did directly, but here we have taken as a separately, like non-current liabilities B value, current liability C value, like that we have taken. In our previous sum we have did directly. Now, if you see assets, non-current assets, FA stands for what? Fixed assets, right? In fixed assets, what we have taken, land, building, plant, furniture is all comes under the fixed assets. And current assets, in current assets, stock, debtors, okay, cash, this all. So please watch the video that we are going to solve the 10th problem, and take screenshot and try to write fair notes. Okay, here equity and liabilities, shareholders fund, share capital 6% preference capital, 6% preference capital, that is 30,000 and 30,000. Okay, and equity share capital reserves base here is equity share capital base year is 40,000, and current year is 40,000. And reserves, here reserves in 2016 20,000 and 2017 is 24,500. Okay, and this is the A value 2016 together, all preference capital, preference share capital, okay, equity share capital and reserves. We have added all this and we got A value 90,000 and 94,500 current year value. Now, if you see non-current liabilities, debentures is 10,000 2016 and 15,000 in 2017. Okay, and current liabilities, outstanding tax. Oh yes, it is a outstanding tax, creditors, bills payable. Okay, outstanding tax in 2016 is 10,000 and 2017 15,000. Creditors 15,000 base year, and current year it is 20,000. Bills payable 5,000 in base year and 7,500 in current year. So these all values we have added, so you will get the C value 30,000 and 42,500 total. Equity liability shareholder funds plus non-current liabilities plus current liabilities ABC, you got 1,30,000 and 1,52,000. Now it's time to know the absolute change first. In this kind of problems, reference, first you have to enter the base year and current year. After finishing of all this, you go for absolute change. Now absolute change, 30,000 minus 30,000 nil. and obviously percentage change also nil. 40,000 minus 40,000 nil. Obviously, what is this percentage change also nil. And 24,500 in 2017, deduct 20,000, you will get 4,500. Again, 94,500 minus 90,000, you got 4,500. So like vice versa, we will deduct from all current year values with last year values, we will get the absolute change. Now assets is non-current assets. Land 10,000 and 10,000, current year and base year 10,000, so nil, absolute change. Building 30,000 and 27,000. So here 30,000 in 2016 building value, and in 2017 it's 27,000, means decrease 3,000 less. Yes or no? Minus 3,000. Now plant is 30,000, and 2017 its value is 27,000. Value is decreased compared to last year, so minus 30, minus 3,000. Now furniture 10,000, and current year it is 14,000, means value increased 4,000. And altogether we will take the value as a D. What is fixed assets? What we have taken as D? Fixed assets. Now see the current assets. Current assets stock 20,000, and current year is the 30,000. So I am writing here last year and the current year. Okay, so this is a absolute change, and this is the percentage change. Now if you see 20,000, 30,000, so absolute change 10,000. Debtors 20,000 and 30,000, here 10,000 change. Cash 10,000, 14,000, absolute change is 4,000. So all together this current assets we taken as a E value. D plus E, we got how much ma? We got 1,30,000 and 1,52,000. Now this absolute change we got by deducting from current assets this last year, sorry, current year values, this last year values, we will get this absolute change. Now it's time for percentage change. To know the percentage change, what are the formula? Absolute change divided by last year or base year is one of the same, or you can call it as a base year. Okay, into 100. Absolute change divided by last year into 100. So see here 4,500 in reserves. So 4,500 divided by 20,000 into 100, you will get 22.5%. 4,500 divided by 90,000 into 100, if you will get 5.00%. Is that clear? Now in debentures, if you do 5,000 divided by last year is 10,000 into 100, you will get 50.0%. Again in current liabilities, 5,000 divided by 10,000 into 100, you will get 50.0. Again 5,000 divided by 15,000 into 100, you will get 33.33%. Again 2,500 divided by 5,000 into 100, 50.0. Again 12,500 divided by 30,000 into 100, 41.67. Again 22,000 divided by 1,30,000 into 100, 16.92. Okay, and again minus 3,000 divided by 30,000 into 100, minus 10%. Again minus 3,000 divided by 30%, again minus 10%. 4,000 divided by 10,000 into 100, 40%, 40.0. Now minus 2,000 divided by 80,000, minus 2.5. Okay, means minus how we are calculating? Minus 2,000 divided by last year value is 80,000 into 100, you got the minus 25. Okay, now current assets, 10,000 divided by 20,000 into 100, you will get 50%. Again 10,000 divided by 20,000 into 100, same. Okay, 4,000 divided by 10,000 into 140%. 24,000 divided by 50,000 into 148%. Again, 22,000 divided by 1,30,000 into 116.92. This is very simple problem, dear friends. First, you have to write equity and liabilities one side, and after that assets one side. Again, base year first and current year. Okay, first we will enter all the values, and after that we will enter the absolute change. Okay, by doing minus, and after that percentage change. With the help of this formula, we will solve this all percentages. Is I am clear? This is the comparative balances sheet of the year 2016 and 17. It is a long problem, 10th problem. It is a 10th problem. And also, if you have to need, to write, what do you say, this percentage change also. If you see, total liabilities and capital increase from 1,30,000 to 1,52,000, means increase how much ma? How much increased here? How much increase? Increased by 16 to 17%. Overall increased 16 to 17 percentage, right? So it is a slight increase. How much increase? 1,52,000 minus 1,32,000. If you do minus, you will get the 20,000, means increased. Yes or no? And shareholders funds, if you see the shareholders funds in equity share capital, there is no change, and in the preference share capital, there is no change. Reserves, yes, increase by how much? 4,500. Okay, and non-current liabilities, debentures increased from 5,000. It increased for 5,000. Company raised more long-term loans. This may be for expansion, but it also increases the financial risk. Okay, and current liabilities, if you see the current liabilities, outstanding expenses, creditors, payables. Okay, creditors and bills payables have increased, all increased. Total current liabilities increased 30,000 to 42,500. 30,000 to 42,500, means how much increased? 12,500. Increase in current liabilities shows, what it showing ma? Business activity may have increased, but short term obligations are also rising. Is I'm clear? And non-current assets, in non-current assets, land no change. Okay, building and plant, just now we have discussed, right, have decreased. Possible of depreciation on sale. Furniture, what happened here? Furniture value have increased, right, from 10,000 to 14,000. Decrease in fixed assets may be due to depreciation. And increase in furniture may indicate office expansion. Now let's we see the current assets. Here current assets, stock, debtors, and cash increase. Total current assets increased significantly. Increase in current assets shows higher sales, more debtors, more stock, business expansion, improved liquidity, more cash. Is I am clear? So overall conclusion, if you see, the company is expanding, increase in total assets. Okay, profitability seems good, increase in reserves, liquidity position improved, increase in current assets. But borrowings and current liabilities also increased, so financial obligations are higher. Okay, so financial position of the company has improved in 2017 compared to 2016, but it should control increasing liabilities. So this is the problem. Okay, we have to, I'm not mentioned interpretation, I have explained, but you people try to write your own interpretation while solving the problem. You have to first solve the problem, and what are the things that you have observed in a problem that you mentioned in point wise. Okay, thank you.